Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been really a roller coaster. On one hand, we had a strong indicator suggesting economic strength. However, this momentum is tempered by several concerning data points, particularly on inflation. First, we are seeing US industrial production. We are seeing an increase of 0.9% month over month, significantly exceeding the 0.3 forecast and reversing the previous minus 0.1. This signifies a strong growth indicating increased economic activity. This strong figure is really healthy for the activity in the industrial sector. Also, we are seeing US manufacturing output also at 0.6%, exceeding the 0.2 expectations. This, coupled with the US capacity utilization at 77%, surprising both the forecast 77 and the previous 76, points towards really growth in the production levels. The housing sector is also showing signs of strength from US housing starts. We are seeing 1,499,000, really increasing both the forecast and the previous. And also, the building permits who are showing a slight month-over-month decrease of minus 0.7%. This all points towards, as we saw in the positive sheet of the Business Optimism Index, we saw the 105 surpassing both the forecast and the previous reading, reflecting increased positive sentiment strong among small business owners. So all this data up here from the housing sector and the manufacturing sector, industrial production, all these are good news. But the main key driver this week was the negative sentiment on the CPI. We've seen that the US CPI year over year rose slightly to 2.9% from 2.7. Remember that this is in the green because we saw an increase, but all these factors are negative. It's a slight increase indicating continuing inflationary pressures. We have also the core CPI is slightly decreased but remains above the Fed's target. This is just nothing, 0.1, it's nothing. We have the PPI in 3.3% coming up from the 3% is an increase indicating now in the producer price pressure, and also the core PPI remaining flat at 3.5, the same as the previous one. So all this makes me think, and my algorithm makes me really state that the sentiment is a little bit more bullish than neutral, but still 58, it's not what we want to see. We wanted to see a good expectations on inflation, and then we can also take into account all these data from the bullish and good economic data from the housing and the manufacturing, and we might be around 70, things like that. But this is not what we got. So the Nasdaq, the S&P, the Russell all are experiencing mixed reactions, reflecting the complex economic picture that we have right now. We have the positive economic data supporting some upward momentum, but the persistent concern about inflation and the potential impact of the new administration's policies that are going to be started next week create big headwind. In fact, the IMF has warned about potential inflationary pressures linked to policy changes under the new US administrations. So all this is adding to markets uncertainty and the concern that the Fed could become more hawkish. From the Fed itself, Fed Hammock indicated that inflationary remains an issue and restrictive policy is needed, while Fed's waters suggested that rate cuts could come in the first half of the year if inflation data cooperates. This divergence in opinion among the Fed members is contributing to the overall market volatility. Don't forget about the tensions with US-China trades. In conclusion, the US stock market is navigating a really challenging period, a really key period when a new administration is going to take over. We are seeing robust economic data alongside rising inflationary pressures. So all this combined with the new administration makes me think that this is super complex. But on Friday, we have something really interesting. Let's first see how we were on the daily. We are still, let me adjust, we are still in the downward spiral. We are seeing a clear, orderly pullback. This is good, don't get me wrong, but we have to find the good spot in order for us to position ourselves to the long side. I'm a permabull, so I'm waiting to buy this market, as I did on the first, I think it was on Thursday. I took a really good trade. The first trade of the year that surpasses 5,000. It's a good start, but I'm still really patient. On Friday, I didn't trade because I couldn't find the setup. So patience and discipline is key right now to wait for that specific moment. So we are seeing that we are right now in the middle of the last week and last week low. We are still in range of the weekly. So these three candles make me think that something has changed. If we take a look to the 1 hour, we can see two big pushes: the CPI push, and then out of nowhere, from the ceasefire in Israel Gaza with Hamas, we saw another push. But I mean, it was a little bit at the end. It came out of nowhere. Let me just show you how the 15-minute, I was structuring the 15-minute to try to buy, but I couldn't find a setup. So we are in the 1 hour. We have the daily here in the inverse, and I was waiting also in this range. And then we have from the CPI candle this 1 hour that was open. So I was trying to find this, and we did it. We found at the end of Thursday this pullback, really big pullback to liquidity. And then look what happens. During the overnight, we just went up, 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 up. And suddenly, I mean, some of you may think, okay, this is an ascending triangle. I don't trade these drawings. I trade liquidity. And out of nowhere, we have 1, 2, 3, 4, 5, 6 15-minute candles in a row until the liquidity was taken. So what the heck? I couldn't find an entry. If we go down to the 5-minute, it is what was, I was tracking this 15-minute to maybe do something like this and take this setup. But no, then boom, out of nowhere, it was unexpected. On the 1-minute chart was really surprising. Look at this. And then at the open, just that. We pull back, and then we were and we finish at the mid of the range. And the ES was similar. Spike, and then a lot of choppy price action. What is this? What is this? Sometimes I take a look to the internals to see what is really driving the market. And let me tell you, the volume was not spectacular on Friday, and the advanced decliners were to the downside on the ES. And on the Nasdaq, on the Qs, the volume was really good, but we were just push and hold. So the Nasdaq was really, really pushing volume, but out of nowhere. Was this because the ceasefire between Israel and Hamas? Was this because Trump? I think so. I think people is betting for a big push, a big squeeze when Trump starts in the office. But I'm following setups and I couldn't find a setup. So the only thing that I can do right now is just see if there are certain convergences. We have Amazon 2%, we have Nvidia 3%, and the entire semiconductors 2.36. Really good, really strong semiconductor sector, really strong banks. Look at this, XLF 0.84, consumer discretionary 1.40. So everything looks good. But the dollar was in the green. Yields were pushing. Let me just show you the daily. Yields were bouncing. The 2-year, the 10-year after the pullback, it's holding about 4.6. All the yields in the future until July increased a little bit. And this means that maybe there will be no rate cuts until September. So where are we in terms of it's quite uncertain what is happening. The RSP was showing some kind of momentum, a little bit of trend after the big harsh pullback at the end of the year. And then, I mean, it's not super, I mean, we bounced, but let me tell you, after this, we need more. This is not enough. So I'm a little bit skeptical from Friday's price action. Let's see how the week starts. And the first levels that I wanted to see, it's, excuse me, I mean, we open a little bit of daily here. So this daily, we can remove it. We can remove the 1 hour. This is now the daily. And remember that we had this. So the first thing that we don't want to see, it's these lows being taken. For example, we have a small daily, but I'm not going to consider that. But what I want to consider is this kind of bodies. So this range, I don't want this range to be broken down because I think big money is sustaining here. So in terms of upside, we have a daily in here. We have this daily. And then we have the 1 hour. And if we go to the 1 hour, everything is lining up for that specific setup. So we open the 1 hour here and we tapped, we rejected 1 and 2 times. This was a wood short for the breakers. And then we have this 1 hour on the daily. So right here in the middle of, if we take this range, we are up here. Do we think that we are going straight or we are going to pull back a bit and find some more buyers? That's the thing that I want to see. The first thing, the CPI candle is this, the gap. So this is the 1 hour that I don't want to be taken out. And then we have another 1 hour that we can track to see if it holds. So all this is to really see how the price action reacts to this level, to these levels and these areas on Monday. Then we have this inverse where, and as you can see, we are framing our sentiment just to watch on Monday. And this is pretty interesting. This rejection was pretty interesting. So if we zoom in, we can see how the market might do this and then attack the higher 1 hour inverse. That would be my setup. So I will be watching this area around 21,400s. If we go to the 15-minute, the one that I like to trade, we have a series of bullish fair value gaps here from the push that we never tapped. So this is now a 15, and this is the only one that I'm going to track. This one is the setup, my trigger. Then we have sell side liquidity. And then we also have a buy side liquidity here that we never took. And in terms of buy side, in terms of Fibonacci, for the Fibonacci guys, we have 50% retracement here. And if we transform this into the golden pocket, look at this. Look at where we can find some support. This is my framework. I would like the market to go down to the golden pocket, take the sell side liquidity, hold, give me some manipulation, and then we can buy towards buy side liquidity and higher. This is my expectations for next week. Maybe Monday, maybe Tuesday, I don't know. But let's see what happens, because I have a setup, I have a framework, I'm still bullish, but I really need to see price action do some things before I jump in. So remember that Trump is starting, I think it's next week, right? So that's going to be insane volatility. So control your emotions, control your manage your risk, be patient, because the setups will not change. They will be there. But if you lose to your emotions, you will fall into some traps, and that's not good. As always, that's all. We cover a lot of things. Be prepared for next week. That's going to be a lot of opportunities, but be really careful. And if you found this weekly recap useful, please give it a like, subscribe to the channel, because I upload videos like this every Saturday for the weekly recaps, and also from Monday through Friday for daily forecast, market updates, and market recaps. I appreciate your time as always. Remember that discipline, patience, and risk management. You know me. You know that I say this all the time. It's true. If you want to be successful in this industry, you have to have those skills mastered. Not, you will be just liquidity for the big and for the smart player. So be smart, learn, do your own analysis, have a good weekend, and see you next week. That is going to be for sure insane.